Okay, so fine. Let's quickly start. Guys, just give me 2 minutes, huh? 2 minutes, and then we can start properly. Okay, so guys, all of you all know, yeah, I'm Maryam here. So guys, today we are going to start the first class of the revision for 2023. Even if you all are 2022 student, it's okay. We are going to discuss one paper. One paper doesn't mean one whole paper, just with few questions for the time we have for within 2 hours. Okay, so let's quickly start. So guys, I'm going to explain you all first of all how this revision is going to work. Okay, so guys, see here, first of all, in this revision class, actually for 2023, if you take guys for your A level, before your A levels, I will be doing two sections. First of all, I will do the normal revision class. After that, I will stop that and I will start something called early birds class. Okay, most of you all might have already heard about that, right? So guys, now see here in the revision class, what I will be doing is only up to maybe day 7. Only up to day 7, the questions which I'm going to give are model questions, only up to day 7. And then guys, from day 8 onwards, you will be getting past paper. Okay, I will be sending papers which are related to past paper from year 2000 to year 2011. Let's say 2010. Okay, so it's all past papers which I will be making as a paper and giving you all in the revision class. So what I will do is I will be sending these papers every week before your class. I will be sending this paper. You all have to keep timing and do that, and then in the class I will be discussing. So guys, when I'm discussing this paper, I will make sure I go through the summary of the theory parts as well. So then guys, this will happen maybe for around 6 months. For around 6 months, we will be having this program. Guys, is it lagging for everyone? Is it lagging for you? No, right? Okay, no. Okay, that means your connection, please check it guys. So guys, now see here, so like around maybe guys for 6 months I will be doing from year 2000 to 2010 A level paper. Okay, for around 6 months, and then guys, after that, after 6 months, I will be starting another program, that's early birds. So this early bird session guys, it will be maybe around 5 months or something, it depends. Okay, so let's say, okay, let's say around 4 to 5 months. Okay, so guys, this early bird session will be around 4 to 5 months. Okay, so now what happens is, in this early bird session, I will be doing past paper. I'll be doing past paper from 2011 to 2021. Okay, when you get the 2022 students, if they are done with the A-level paper, I will be including it as well. So let's put it as 2022. Okay, so guys, in this early birds, we will be doing 5 months, which is going to be the word itself says early birds, right? So this early bird session will be, guys, from morning 5:30 to 7:30. Morning 5:30 to 7:30. Okay, so after I stop this, I will be starting this. So this is how it's going to work. So the early bird session, guys, how it will work is, first of all, each chapter, before I do questions of each chapter, I have separated the past paper into different into each chapter separately. All the past papers I have separated. So what I will do is, these chapters, before I explain, I will make a full summary of the theory part. Let's say, for example, I'm going to discuss today chapter 2 questions past paper. So before that, what I will do is, I will be explaining the full theory part of chapter 2, but not in detail, but yes, maybe around 60% of what I'm going to, maybe 50% of what I will do in the theory class, just a summarized version. You understand? So that's going to happen in the early birds class. So guys, without delaying, if not, we will not have enough time to do the paper. Let's quickly start. So guys, today we are starting revision day one. Revision day one. So every day you will be having, every week you will have one revision paper. Okay, sometimes I might give homework papers as well. As well as, guys, if you are a student who is not coming to my classes, if you're a student who is not coming to my classes, I just want to add to that, every week you will have mock exams, around 2 to 3 mock exams. It will be sent through the WhatsApp groups where you have to do it. You don't have to submit it. After 24 hours, we will be sending the marking scheme. You all can mark the mock exam you did. It's additional, guys. It's additional to the revision class. You will be getting mock exams where you have to do that at home. You don't have to submit to us, but you can do it just to make sure you all do a lot of questions. Okay. So yeah, so guys, now what I will do is, before 2 days of the class, let's say our class is Mondays. So Saturday, maybe I will send the paper. Every week, Saturday, I will be sending the paper. You all have to keep timing and do it before Monday class. That's how it works. Okay, so now let's start with the first one. So it's not like this, guys. In the revision class, in early birds class, I do chapter wise, right? In early birds class, I will be doing chapter wise. Okay, but in this revision class, it's not going to be chapter wise. It's going to be a mixture. Mixture means, like with this, guys, I will be including part 1 around 5 to 8 questions, and then a part 2 full question. Part 2 full question. That's how we are going to do, because we have 2 hours to discuss, and it's not enough to put a lot of questions in that 2 hours to discuss, because no time. There's no enough time for that. Okay, so this won't be chapter wise, but I will be including from year 2000 to 2010 past paper, but only for the first 7 revision classes, we will be doing model questions. These are not past paper questions. Okay. So yeah, let's start. Which, by the way, are up to this link, guys, only up to 100 participants can be there. Okay, if you, please make sure you all don't leave, because sometimes you might not be able to join back if the 100 reaches already. Okay, so now guys, see here, which are one of the following best describes the primary objective of accounting. So if you take your past paper, just go through your past paper, guys. Your past paper, first question will always ask about the objective, either financial accounting, management accounting, or just accounting. You know, guys, accounting is divided into 2, right? So if you take accounting is divided into 2, as financial accounting and management accounting. You divide it as financial and management. Okay, so now either in the exam, they will ask you the objective of accounting, or they will ask you the objective of financial, or the objective of management? So this is the question which is tested every year, and it's easy to score marks for this question. You should make sure you score whatever happens. Okay, because these are easy ways to score marks. So now this you have studied in chapter 1. Which one of the following best describes the primary objective of accounting? Can you send me your answers privately? Quickly, everyone, send me the answers. What is the answer you got? Okay, so yeah, it's not a difficult question, right? Most of y'all have got it right. Okay, let's see. Which one of the following best describes the primary objective of accounting? They are not specifying financial accounting. They are not specifying management accounting. They are just asking accounting, guys. When they just ask you accounting, you should make sure when you give the answer, you should make sure you are not just giving the answer for financial or management. It should be a common one, because accounting is divided as financial and management. They are not asking financial or management. They're just asking you accounting. You understand? Now, when you answer an MCQ question, okay, see here, yeah, no problem, Amna. Okay, now guys, when you do a question like this, MCQ, you should always make sure you see why is, if you tell second answer is correct, you all should be able to tell why is the other answer wrong. If you say, okay, miss, second answer is the correct one. When you do MCQ question, when you do MCQ, when you say second answer is the correct one, you should make sure you know why first, third, and fourth, fifth are wrong. Guys, if you can explain yourself why others are wrong, then guys, you really can do accounting. Not only accounting, any A-level subject. When you are doing at home, when you get an answer, you should ask yourself, why not the other answer? Why not the other answer? You get what I'm saying? Ask yourself, if you can reply for that, then guys, that means you are good. But if you can't reply, why first answer is not correct, why third and fourth and fifth not correct, if you can't reply for that, that means, guys, you don't know the basic knowledge. You understand? So every time when you do MCQ, always investigate why the other answers are wrong if you get the correct answer. Okay, but if it is calculation wise, you can't do that, right? If it is addition subtraction wise, that is another thing. But if it is a theory thing, you have to make sure you answer for that. Okay, now guys, let's start. Now you all have to tell me why is it wrong. Okay, why is it wrong? Communicate financial, cost, and management information to the management decision making process. Which is making the first answer wrong? Which one is making the first answer wrong? Why is first answer wrong? Please tell me. Why? Very good. They ask you the primary objective of accounting. They didn't ask you, guys, the primary objective of management accounting. They never asked you what is the primary objective of management accounting. They ask you what is the objective of accounting. So guys, see here, this is communicate financial, cost, and management information to management decision making. Guys, this is management accounting objective, but they didn't ask you guys management accounting. They ask the common one. So that is why, guys, your first answer is wrong. That is why your first answer is wrong. Now go to the next one. Let's pick the second one, because most of y'all are telling second one is the correct answer. So let's see why the others are wrong. Record all the business transactions in journals and ledger accounts for preparation of financial statements. Okay. Now, why is third one wrong? Record all business transaction. You're recording the transaction in journal. Journal means prime entry books, in ledger accounts for preparation of financial statements. Why is it wrong? Very good. This is a process of financial accounting. Guys, we see here, when it comes to, this is not the objective. You can't tell me this is the objective of financial accounting. No, that's wrong. This is the process. Achieve the objective. You know, guys, what is the financial accounting process? Financial accounting process is this. See here, first of all, you take transactions, record in prime entry, you transfer to ledger, then you have to prepare trial balance, then the financial statement. This is what you call as the financial accounting process. Okay, so then guys, why the third answer is wrong? Here they are not talking about the objective. Here they are talking about the financial accounting process. Financial accounting process. So that's why, guys, your third answer is wrong. Third answer is wrong. Okay, so guys, please make sure you don't leave the class, because you might not be able to join back, because the maximum participants is 100. I'm telling you all now itself, because the other link is used for another class right now where 500 students can join. So make sure you all don't leave. You might not be able to join back. Okay, next one. For the purpose of analyzing and interpreting financial results of a business, you analyze and interpret financial results. What is this? Analyzing, interpreting, again, very good. Analyzing and interpreting financial accounting process. Guys, let's go to chapter 1. Let's go to chapter 1. Where do you analyze and interpret financial statements? It is also, guys, a financial accounting process. See, it's also a financial accounting process where you analyze and interpret. Analyze and interpret is a financial accounting process, guys. It's a financial accounting process. This is where you will do ratios. In grade 13, there's a chapter called ratios. So in ratios, what you will do is you will find the relationship between elements and analyze. You will go in depth and connect between elements and try to find what is the relationship between them. How many percent is gross profit out of your sales income, out of your total sales income? What is the percentage of gross profit? You understand? That's what analyzing and interpret means. So the fourth answer is wrong, because that is also a financial accounting process. Because if you all are planning to continue the classes, what I'm telling you all is, don't, every time when I send a paper, you all can take a hard copy. Okay, or if you're finding difficult, if you don't have a shop close by, what you can do is you can 4 weeks papers you can together at the end of the month. Maybe you take a printout and maintain a file. Okay, but what I'm telling is, don't write it in the paper. Whatever you print out, don't write anything in the paper. Keep it blank, guys. Take a different book and write. If you can take like this, take a book, maybe divide it into 2, or you can take 2 books. A small book for short notes. Small means less pages for short notes. CR book, less pages for short note. Whatever extra information or extra knowledge or whatever I'm telling you, you can write it down there. And guys, you can take another book to write your answers. Maybe 200-page or 250-page book to write your answers. So if you write in papers, you might misplace it, right? What I used to do is, I used to take a book and write day 1 and write the answers and mark it and put marks. Don't write it in the hard copy, the paper. Why? You know, guys, if you write the answers and keep there, you will not be able to use it once again. You all should make sure you do the paper again and again to see whether you all are getting better. Maybe last time you got this wrong. Next time you should see whether you're getting it right. You understand? For that, guys, any paper, any subject in A levels, don't ever write it in the paper. When you're doing in the classes, don't ever write it in the paper. Keep it blank, you know, then only you can do it next time. If there is any additional thing you have to write, take a different book and write it neatly and keep, so you can refer. When you do the paper again, let's say you got a doubt after you do the paper, your answer is wrong. You have a doubt. Why is it wrong? You can't remember what the teacher explained before. You can check the short note which you wrote and keep, right? You understand? So that will really help you. You understand? So please make sure you do that way. So last one, communicate all business information for management decision. What is that? You're communicating all, it's also a part of management accounting. You're communicating all the business information for decision making. Guys, it's also a management, it's like management accounting objective. You're sharing the information for the managers so that they can make decision. So that, guys, this is management accounting objective. So guys, do you understand now why the second answer is correct? Even without reading it, you understood second answer is correct. But let's read it, right? Communicate business information. Now they are not mentioning. They are not telling financial or they are not telling management accounting information. They're just saying business. You understand? So that means it includes both financial and management. To end users. End users are the stakeholders, internal, external, all stakeholders, so that they can make decision. When you're answering the objective of accounting, you have 3 questions to answer. You have to answer, guys, what? Okay, why and whom? Okay, so now guys, what are you doing? Guys, you are actually what are you doing? You're sharing the information, right? Why? So that they can make decision. To whom? Stakeholders. So that's accounting. We say it's a process of providing information. So what are you doing? You're providing information. Why? Guys, you're doing that so that they can make decision. To whom? To the shareholders. Not shareholders, stakeholders. To the users. So shareholder is also a stakeholder. So guys, answer for question 1 is second one. If anyone got it wrong, I hope you all understood why your answer is wrong. Okay, now go to the next one. Soon send me your answer. Question 2, answer please. By the way, guys, these 2, 3, 4 are good questions. If you can get all 3 right, if you all have got all 3 right, that means it's great. Okay. So now let's see here. When you get a connected question, always try to read all 3 requirements at once. So you can try to answer all 3 questions at once. Okay. Sometimes it's difficult, but most of the time you can, right? So what you do is now see the question is connected. 2, 3, and 4. It's connected, right? Say following transactions took place in Nayana's business. Please make sure when I'm discussing, write the workings and keep. Okay, so this has happened in Nayana's business. First of all, you should focus there. Okay, what business are you? You're Nayana's business. Okay, so now the dates are important. 4th, 10th, 15th, 20th. Now see here, this 5th is other month, the next month. Because most of the time we make mistake here. You know why? We don't consider the date, but please understand this 5th is next month. Okay, keep that in mind. Maybe we will need it. Now see here, first question, the accounting equations which shows the net impact of the above transaction in Nayana's business as at 31st March. Up which transaction we should stop? Up to which transaction should we stop? They are asking as at 31st March, where should we stop? Very good. Guys, most of y'all do a mistake. You know why? You find out everything. But they are clearly telling only this. There was a similar question like this in 2018 paper. Okay, so some students, they don't consider in the tension situation, they don't consider the date. Okay, guys, see here, they are only asking up to 31st March. Okay, up to 31st March. So that means 5th of April is next month. So you stop it here, up to here. In the PDF, it's 5th of March. Maybe that's the old one. Okay, I might have shared the guys, please change it. I'm really sorry. I have this is the updated one. Maybe there was a mistake and I changed it, guys. Okay, so it should be actually 5th of April. So guys, see here, you have to stop it at 28th of March. Okay, so do you all need time to do it again? I'll just discuss if not, because it's my mistake, by the way. I should have checked it. Okay, so guys, it's actually up to 28th only you can consider, because see here, it's up 28th. Why 31st March only they're asking? They're not asking next month. Okay, so guys, can you quickly, I'll give you 1 minute. You all might have got the wrong answer, right? Because of that mistake. Can you just get the correct answer quickly and send me again?
Three.
Okay, let's see here. So now, first of all, to answer this question, okay, I'll show you the working. Okay, asset equals liability plus equity, right? So that's how they have given. So we will also write like that. The answer script they have given like that. No, asset equals liability plus equity. So we will also write like that. If not, sometimes we might do silly mistakes. If you write equity plus liability, sometimes you can do silly mistake, because they have said liability plus equity. We'll also do the same thing, to avoid silly mistakes. Oh, okay, fine. Now that's better. Now, on 4th of March 2019, purchase goods costing 350 from Salia on credit. As even if they don't use the word on credit, listen carefully. If they use a name, usually it's on credit. When they tell a name, guys, it's on credit. You understand? Even if they don't say the word on credit, if they just tell a name from Salia or something, then you should understand it's on credit. Unless they tell you it's on cash, you should understand it's on credit. But if they don't tell a name, and if they don't tell it's on credit, then it's always on cash. You understand? But if they mention the name, guys, then guys, it means it's on credit. So guys, you have purchased on credit. When you purchase goods, your goods increases, your stock increases. Because of that, asset increases. Okay, because of that, your asset increases. But you're purchasing on credit, guys. When you purchase on credit, whom do you create? Trade payable or trade receivable. When you purchase on credit, you create who? You create, guys, trade payable. Trade payable is a liability. Your liability increases. When your liability increases, go and add it, guys, because you're creating a liability. So add the liability. Next one, return of goods 50,000 to Salia. Now you're returning the goods purchased. Very easy to write purchase return. How to write? If you know how to record purchase return will be the opposite. if you know how to record purchase, guys, your purchase return is going to be the opposite. You understand? So then, guys, when you made a purchase, your asset increase. Now you're returning the goods back. So your goods should reduce, asset reduces. When you purchase, you create a liability, right? Now, once you return, you don't have to pay 50,000 to Salia. You're returning the goods back. So liability reduces. Once you return the goods back, okay, you don't have to pay the money back. So then that's why your liability reduces. Next one, sale of goods costing 200 for 280,000 to earlier traders on credit. Guys, now you're selling goods. When you sell goods, you sell on credit. When you sell on credit, you create trade receivable. When you sell on credit, you create trade receivable. When you purchase on credit, you create trade payable. So Salia is the trade payable, while Aurelia is the trade receivable. So when you sell, guys, now Aurelia should pay you how much? 280. Because of that, your trade receivable increases. Trade receivable is a large asset. So when your asset increases, you should add it, because now your Aurelia should pay you how much? 280. So because of that asset increases, you add. Guys, what is the cost of the goods? Cost is 200,000. When you sell, your goods reduces. When you sell, what happens to your goods? Your goods reduces. Goods are assets. Assets reduces, deduct it. How much is the profit from this sales? You sold it for 280. The cost is 200. What's the profit, guys? How much?
80,000.
80. Profit increases or decreases equity? Increases equity. So go and add it. Guys, your profit will increase your equity. So go and add it by 80,000. Now, guys, go to the next one. So next one, receiving a discount of 3, cash paid to Salia amounting to 247. Guys, you have paid cash to Salia. Salia is a trade payable, right? So when you pay, money goes out. That's very easy. Deduct it. You're paying 247, your cash goes out. Cash is an asset. Asset reduces by 247. Now, guys, when you pay Salia gave a discount. Is this discount allowed or received? When you get a discount, is it discount allowed or received? Discount received. Discount received, guys. It's discount received because of that. It's an income or an expense. When you get discount, income or an expense?
Income.
Income increases your equity. So go and add it, guys. That it's an income. Your income will increase the equity. So add by 3,000. Add your equity by 3,000. Guys, what is the total settled amount? How much did you settle Salia? How much?
250.
250. Guys, remember, settled includes 2 components. This is what you have to remember. Settled has 2 components, cash and discount. Cash and discount. So, guys, you're paying cash of 247,000. You're receiving a discount of 3,000. So the total settled amount is 250. 250. Guys, once you settle your trade payable, hereafter you don't have to pay money. Once you settle your trade payable, you don't have to pay him money anymore, right? So, guys, your trade payable is a liability. Once you settle your liability reduces by the settled amount. If your trade receivable settles the money, trade receivables, you should reduce it by the settled amount, not the cash amount, not the discount amount, by the settled amount. Okay, when you settle your trade payable, you have to reduce it by the amount you have settled. Guys, don't forget the last one you have to ignore. Why? Because it's next month. They are only asking up 31st March. So you have to ignore the last month. Last transaction is actually next month. So now, guys, what is the closing balance? You add everything one by one. You will get the answer. What's the answer? First one,
First one.
First one. I'll give you 1 minute, go through it. You try question 2 and send me the answer. Okay, now question 2 is a good question. Okay, question 1, what is the mistake most of you all will do? You all will try to include the last transaction. Question 2 also, you all will make some mistakes. Now guys, read question 2 and try to send me the answer for question 3. I mean question 3, not 2. Okay, guys, now let's do here. See here, question 3, the accounting equation which shows the net impact of the above transactions of Salia business as at 31st March if he sold the goods to Nayana. See here, they are telling you the accounting equation which shows the net impact of the above transaction of Salia's business. Now they are not talking about Nayana. Guys, now they are talking about Salia. They're asking in Salia's point of view. You understand? They are talking in Salia's point of view. So you should do the opposite, right? If Nayana, guys, in Nayana's business, if it is credit purchase, in Salia's business, what is it? In Salia's business, what is it?
Credit sales.
Credit sales. If Nayana's business, if it is return outwards, in Salia's business, what is it?
Return inwards.
Return inwards. Now listen, they are asking what is the accounting equation which shows the net impact of the above transactions in Salia's business up to 31st March. If he sold goods to Nayana by adding 20% on gross profit, they are only talking about Salia and Nayana. So you cannot record any arrears transaction or anything. They are only talking about the relationship between Salia and Nayana. So what are the transactions which will come? Will the 4th March come? Should you input 4th of March? Soon tell me.
Yes.
4th of March. Yes, because that happened between Salia and Nayana. 10th of March?
Yes.
Yes, because that also happened between Salia and Nayana. 15th of March?
No.
No, because you're in the point of view of Salia, okay? So Aralia is not connected to Salia, right? What about 28th of March? Is it Salia and Nayana?
Yes.
Yes, so only 3 transactions you have to consider. They are clearly telling only up to 1st March. So that means only 3 transactions you have to consider. Only 3 transactions. And not only that, not Nayana's point of view, guys, in Salia's point of view. So guys, see here, if you have purchased on credit, Salia would have sold on credit. Guys, the purchase price for Nayana is what for Salia? The purchase price for Nayana is what for Salia?
Selling.
Selling price. That's the selling price. Nayana's purchase price will be Salia's selling price. So guys, Salia has sold goods on credit. When Salia sells goods on credit, whom do you create? Whom do you create? Sold goods on credit. Yes? Trade receivable, guys. Trade receivable increases. It's an asset. Go and add it under asset. It will create trade receivable, guys. Trade receivable is an asset. Before it created trade payable on based on Naina's point of view. Now in Salia's point of view, it will create trade receivable. Okay, so guys, this is the selling price. How do I know it's the selling price? Because if Nayana's purchase price will be Salia's selling price, but the problem is now you have to find the cost of the goods sold. You know you sold for 350, but at what cost? For that only, guys, we are going to study now markup and margin. Okay, we are going to study now what? Markup and margin. See here, when it comes to profit, there are 2 ways to calculate profit. I told you to have a short notebook. You can write this down. Can you quickly write? I'll give you 2 minutes. Profit, there are 2 ways, guys. You have 2 ways to calculate profit. So in your short notebook, you can write this. I haven't completed it, but just write it for now. So profit is calculated in 2 ways. We say margin, markup. Okay, markup, margin. So margin is calculated on sales. Markup means you calculate profit on cost. After you write this, I'll explain. Soon copy down. Okay, now guys, see here, done writing, right? Now see here, so when it comes to profit, you can calculate profit to 2 ways. We say margin, markup. Margin is where you calculate profit based on sales. You take the selling price as the base to calculate your profit. Markup is where you take the cost as the base to calculate profit. Okay, if you choose margin, your sales will always be 100%, because if you choose something as the base is always 100%. Guys, if you choose markup, you choose cost as the base, right? Markup is where you choose cost as the base. So when you choose cost as the base, cost is always 100%. 100%. Okay, so now guys, see here, you know sales is 100%. So in the exam, they will give you the profit percentage. They will tell you how much is the percentage of profit. Let's say, guys, the profit is 20%. Profit is 20% in both situations. Guys, if you choose margin, what will be the cost of sales percentage? Because you know sales minus cost of sales gives you profit. So if you choose margin, what's your cost of sales percentage? 100 minus something gives you 20. What is the cost of sales percentage? 80, very good, 80%. If you choose markup, what is your cost of sales percentage? 100. So guys, the organizations, the manager will decide which is the best method for them. Is markup better for them or margin? These are pricing methods, different ways to calculate profit, and they price the products using that. Some businesses, they price using markup. Some businesses, they price their product using margin. If they choose margin on sales, that means sales is 100%. If you take something as the base is 100. If it is markup, they choose cost as the base, then cost is 100%. So guys, now see here, if sales, they will give the profit percentage. Then you can find out sales minus cost of sales gives you profit. Now, in my example, have they chose markup or margin? Means in markup, how sales is 100? Oh yes, I did a mistake here, no? I should have done the opposite. Wait. Markup, I will explain again. Now, guys, in markup, what is 100%? In markup, what is 100%? Sales or cost of sales? Markup. Cost of sales. Is in markup, cost of sales is 100%. Why? Because you take cost as the base. If you take cost as the base, cost is 100%. They will give the profit. Let's say profit is 20%. Then how much is the sales? Because you know sales minus cost of sales gives you gross profit. How much is sales?
120.
120, right? 120. Now, do you understand how I got 120? Because in markup, I know what is cost percentage. Cost is always 100%. So I go backwards. If the profit is 20, I know sales minus cost of sales gives me profit. So then sales should be 120%. Then only I can get the profit as 20%. Are you all clear, guys? Nuzla, are you clear? Margin, sales is 100%. In markup, cost is 100%. So then, guys, they will only give you one, guys. You can find out all the other answers using the percentages. That's really easy to get the answers. Now, guys, based on that, tell me, read the question. Are they choosing markup or margin? Is it markup or margin? Margin, because they say gross profit on sales. If it is on sales, you should understand it's margin. They clearly say that adding 20% profit on sales, guys, that means they are following margin, not markup. If they follow margins, what is 100% sales or cost of sales? If they follow margin, what is 100%? Sales. And they say profit is 20%, guys. So you know sales is 100% and profit is 20%. Then how much is cost of sales percentage? How much is cost of sales? 80. Now, can't you find the answer? You know what is the sales value given? You know, you found the sales value. What is the selling price of Talia's business? What is the selling price? 350,000. Selling price is 350. You know 350,000 is how many percent? 350,000 is 100%. Okay. So you know 350,000 is 100%. Okay. So now, guys, yeah, I will show it. Wait a minute. So 350,000 is 100%. Can't you find the cost of sales now? See here, 350 is equals to 100%. You divide by 100, get the answer for 1%. Find for multiplied by 80. How much is the value? How much is the value? How much is the cost? 280,000. Then what is the profit? 350 minus 280?
70.
70. You understand? So guys, this is how you use this markup and margin to get your answer. So see whether I'll give you some time. Can you now find the return inwards like I did just now? Can you find the return inwards? Okay. See whether you all have understood so far. Can you please explain again? Okay, listen one more time. So guys, Salia's selling price is 350. If they use margin, you know sales is 100%. That's what we studied. If you use margin, sales is 100%. So 350,000 is equals to 100%. So now you have to find how much is the cost, how much is the profit. So if 350 is 100%, you take 350, divide by 100% to find the answer for 1%. And you know cost is how many percent? 80%. Multiplied by 80. Okay. Yes, Hannah. Multiplied by 80, then you will get the answer for 80%. Then guys, you know sales is 350, cost is 280, then the profit is 70,000. This will help you if you know the percentages. Just remember one thing. Profit can be calculated in two ways, markup and margin. Margin is where you take selling price as the base. Markup is where you take the cost as the base. If you take something as the base, it's always 100%. Are you clear now? If you take something as the base is always 100%. In the exam, they will give you the profit percentage. Then you can find out what is the other percentage. Clear? Guys, now can you do the return inwards? So now let's record the sales. So when you make a sales, you create trade receivable. So trade receivable is an asset. Asset increases by 350. Guys, what is the cost of the asset? The cost of the asset is 280. So when you sell, guys, your goods increases. Okay, when you sell your goods increases. Oh, sorry, when you sell your goods decreases. So if your goods decreases, your asset also decreases by 280. Your asset reduces by 280. How much is the profit? 70. 70 is the profit. Equity increases when there is a profit. When there is a profit, your equity shall increase. You're selling the goods for 350 on credit. When you sell on credit, you create trade receivable. Trade receivable is an asset. So asset increases by 350. Sell the goods, you have to incur a cost of 280. So your asset reduces because your goods reduces. There will be a profit of 70, guys. Profit increases equity, add it under equity. So we are done with this part. Now can you do return inwards? So we are done with this. Please do return inwards. Let's see whether you can do using margin. Okay, guys, let's quickly do that. Now there is a return. See here, when you return goods, Salia, so now Nayana is returning to Salia. So for Nayana, it's the purchase price. But for Salia, it's the selling price, right? For Salia, it's the selling price. That's 50,000. So you know the sales is 50. And you know, guys, it's the same percentages because they are using margin. Same percentage. Selling price is 50. Now find the cost, guys. How to do that? 50 is equals to 100%. Find for 80, just like we did. 50 divided by 100 multiplied by 80. What is the cost of this return? 40. What is the profit of this return? Profit. So now, guys, when you sell goods, you create a trade receivable. So when the goods are returned, trade receivable reduces. When you sold goods, your trade receivable increased. When the goods are returned, trade receivable shall decrease. When you sold the goods, your cost decreased, cost of the goods reduced. Now, when the customer returns it back, the goods increases by the cost. When you sold, your profit increased your equity. Now, if it's returned, your profit reduces, equity decreases. Okay, when there is a return, the profit reduces. Because of that, equity also decrease. Equity also decrease. Now, guys, see here the last one. Receiving a discount 3,000. Cash paid Salia amounting to 247. Can someone convert it to the opposite in the point of view of Salia's business? Means why doesn't liability decrease by 50? Since it's return inwards. Return inwards is sales return. Sales return doesn't create liability. Sales return is trade receivable. It's not connected to trade payable. You understand? It's not purchase return, dear. Return inwards is sales return. Okay, you sold the goods and it's being returned. How did you identify its margin? They told you. Okay? Gross profit on sales. You know, if it's gross profit on sales, it's margin. It's margin. Okay, now guys, can someone read this transaction but in the point of view of Salia's business? Who can read it?
Miss, can I?
Sure.
Asset plus 257.
No, dear, no. I'm not asking the answer. I'm asking you to tell this transaction. Okay. I'm asking you to tell this transaction in Salia's point of view, not the answer. Now, if it's receiving a discount in Salia's point of view, what is it?
Allowing a discount.
Allowing a discount of 3,000. For Nayana, it's cash paid. For Salia, what's it?
Cash received.
Cash receive. You understand? So you will say allowing a discount of 3,000. Cash received from Nayana 247. 247. So guys, you have when Nayana pays cash, we receive cash. So because of that, cash is an asset. Asset increases by 247. We receive cash. Asset increases 247. If Nayana gives a discount, okay, if Nayana is receiving a discount, we are giving a discount. Guys, allowing discount, income or expense, when you allow a discount, expense reduces equity. Guys, discount allowed is an expense. It will reduce our equity. Before it was discount received. That's why it increased equity. Now it's discount allowed. Now, guys, say here, how much did you settle? How much did your trade receivable totally settle? How much?
250.
250. So asset reduces, guys. When your trade receivable settles the money, asset reduces by 250. Listen carefully. Trade receivable and trade payable will always reduce by the settled amount. So when the trade receivable settles money, guys, asset reduces by 250. By 250. So guys, what is the total answer? Now get the answer. See whether you all are clear up to here. Get the final answer. What's the total of assets?
57.
The liability? 0.
57.
Equity?
57.
57. So what's the answer, guys? Fourth one, no?
Fourth one.
Fourth one. Fourth one. Guys, can you send me the answer for the next one? Next one also, they are asking only up to 31st March. So don't consider the last transaction. You understand? They have given the last transaction so that you all make mistakes. Now, guys, see here. Next one. Now, are they asking Nayana's point of view or Salia's point of view? Whose business point of view they are asking?
9.
Nayana's. Okay. So within how many minutes we should finish this paper? 1 hour maximum. Maximum 1 hour. But 45 minutes is the 40 to 45 minutes is the correct time. Let's see, will you now? There are 5 MCQs. Now I'll tell you exact time maybe. So 5 minutes each MCQ, 2.4 minutes, 5 questions each MCQ, 2.4 minutes. So for the MCQs, the maximum time based, yeah, so it's 12 minutes for the MCQs. Let's say this is not a full question, but let's say it's a full question maybe. And let's say 36, yes, around 45 minutes maximum, 40 to 45. That's the standard time for your exam, okay? So guys, now go to the next one. So they're asking in Nayana's point of view, not Salia. So you can take this asking in Nayana's point of view. So that's why I say here, at first I put trade payable, trade receivable to make it easy. So you have to stop up to here because they ask only up to 31st March, right? So now let's see here. Purchase of goods costing 350 on credit. When you purchase, guys, you can see the first example and get the trade payable values. What you can do is, see here, first of all, when you purchase, you create a trade payable. Trade payable increased by how much? Increased by 350. Okay, 350. And then what happened when there was a return outwards? Trade payable increased or reduced? When there was a return outwards, trade payable reduced by 50. Okay, when there was a return outwards, trade payable reduced by 50. And then when they settled money, when they settled the money to trade payable reduced again by 250. What's the closing trade payable now? 350 minus 50 gives you 200. 200 minus 50. Sorry, 300. 300 minus 250 is how much? Did I?
50.
50. 350 minus 50 is 300. 300 minus 250 gives you 50,000. Trade payable balance is 50. Now go to trade receivable. Asset column, you can see trade receivable. Okay. So guys, trade receivable, when now the trade receivable created, trade receivable was created in the third transaction. Third one. So how much is the trade receivable? You sold goods on credit for 280. So your trade receivable is 280. You created, when you sold goods, you created 280,000. 280. Okay, 280,000. Guys, have they settled the money before 31st March? Have they settled the money before 31st March to trade receivable? They settled on 5th of April. So can you include that in your answer? It is next month. They are exactly asking only up to 31st March. So 5th of April is next month. You cannot include that. You have to stop it there, guys. What is the final answer? Trade receivable closing balance is 280, while trade payable 50. If there are students here who didn't try this paper, you will feel like I'm going fast. Okay, that's normal, because in 2 hours I have to discuss everything. If you all haven't tried this question before, you will feel like I'm going fast, guys. That's your problem, because that's why I send the papers. You all to do it before the class, because if you don't do it, you will not even understand what I'm explaining. You'd have no idea about the question, what we are doing, right? So that's why, guys, if you're joining, please make sure you do the question paper and then join. No use of joining for discussion if you have never tried the paper before. So guys, the correct answer is fifth one. Fifth one. Okay, fifth one. Now, guys, can you send me the answer for the next question, please? Okay, now guys, let's do the next question. Cash received from trade receivable 95,000. Yes, Arkam. What's the yeah. Guys, if you want me to change the way I'm doing something, you can ask me. You can tell me. I no problem. Okay, guys, see here, cash received from trade receivable 95,000. You have received 95,000 cash in settlement of 100,000. Guys, what is the settled amount? What is the settled amount? How much? 100,000. Settled includes two components, cash and discount. How much is the cash received?
95.
Then how much is the discount?
5.
Is this discount allowed or discount received? If you give a discount allowed or received? Allowed. Very good. It's a discount allowed. Guys, when you give a discount to trade receivable, guys, it's discount allowed. So trade receivable settled amount includes cash received and discount allowed. Cash received is 95,000. Discount allowed is 5,000. So the total trade receivable settled amount is 100,000. 100. But this question is different. They are not totally testing that. See, guys, they are continuing. They are telling that now if actually they have stopped here, if they have stopped here, your equation, accounting equation will be like this. Now, guys, asset equals equity plus liability. No. So when you settle trade receivable is an asset. Asset reduces by 100,000. When you receive cash, asset increases by 95. This is not the answer. When you give a discount allowed is an expense. So expense reduces your equity. Expense reduces your equity by 5,000. If they have stopped here, sorry, here. If they have stopped here, that would be your answer. That would be your answer, guys, if they have stopped there. But they are telling, they're continuing, they are telling, guys, this money which you received, the business didn't take it. The owner took it for his personal use. What do you call this when owner takes it for his personal use?
Drawing.
Drawing. So can you increase your cash? Can you increase your cash? Did you get cash? No, the business didn't get cash, so you can't record it under cash because, guys, whatever trade receivable gave you, the owner directly took the money. We call these, guys, drawings. Drawings increases equity or decreases equity?
Decreases.
So what's the final answer? Asset is decreasing by 100,000 while equity reduces by 100,000. Why? Because 5,000 discount allowed while 95,000 drawings. 5,000 discount allowed while, guys, 95,000 is your drawings. Clear? So, guys, see whether you all are clear. So the answer is, guys, fifth one. Check with whether you all are clear with the workings. If so, we can go to part 2. Okay. Okay, fine. Yeah. Can you please explain it again? Now, see here. Now they are telling they have said the business had the trade receivable has settled our money. Okay, the trade receiver should give us 100,000. So he has to give us 100,000. For that, he is giving us 95,000 cash. So when the trade receivable gives us cash, yes, your cash increases by 95,000. Okay, and now, guys, let's say here trade receivable asset equals equity plus liability. Now they are setting out of 100,000. Cash is only 95,000. That means you have given a discount of 5,000 because they clearly say that they settled 100. Your customer has settled 100, but only you received was 95 because you gave them a discount of 5. You gave a discount of 5, which is discount allowed. So then discount allowed is an expense. Expense reduces equity by 5,000. How much did you settle? Your trade receivable settled 100,000. If your trade receivable settled, trade receivable is an asset. Asset reduces by 100. Asset reduces, but this is not the correct answer. Why? Because they say the money which the business have received, the owner, we call it drawings, guys. If the owner takes the money, we call it drawings. We gave a discount of 5,000. So equity reduces by 5 because we gave a discount. All clear with that, right? And guys, we have settled our trade receivable has settled 100,000. So trade receivable is an asset. Asset reduces by 100. If trade receivable settles, asset reduces by 100. Okay, but the problem is we cannot receive cash. Why? Because the owner took the money. If owner has taken the money for his personal use, we didn't even get the cash, guys. Owner directly took the money. So it's drawings. Drawings reduces equity. Deduct your equity by 95. By 95. So the final impact is minus 100, minus 100. Now clear. Because, guys, this question they are telling owner took the money. If the owner hasn't taken the money, it's the first method. But if the owner has taken the money, it's a drawings here. It's a drawings. So the correct answer is, this is the correct answer. Fifth one, not the third one. Third one, what is the answer for third one? Third one is not the correct answer. No, third one is not the correct answer. Third one will be the correct answer. Third one will be the correct. No, third one can never be the correct answer, man. Even if you do this method, still it's wrong. Right? Okay, so the correct answer is fifth one. Clear, Ashfa? Are you clear?
Yes, miss.
Okay, now guys, let's quickly go to part 2. Okay, so guys, part 2, we have to do this. If there's anyone who haven't drawn the format, I'll give you 2 minutes only, because no use if you haven't drawn. Okay, why have you all thought third one? Third one is not. Why isn't it third one? Why did you all think it's third one? Capital decreases by 95. Okay, because of drawings, that's fine. And another asset decreased by 100. Okay, that is also fine. Asset increased by 95. Asset is not increasing, right? Asset is not increasing. Why? Because you're not getting the cash. Owner is taking the cash for himself. So your asset doesn't increase. That's why not the third one. And they haven't recorded the discount allowed. Discount allowed is an expense. They haven't recorded it, guys. So that's why the answer is not third one. Okay, guys, question part 2, please draw this format and make sure for question 2 you have to draw income statement. Okay, and then guys, SOFP as well. Make sure you have drawn all the formats for the requirements so I can start properly Okay, all done with the formats. Can I start now?
Yes, miss.
Okay. Fine. First one, let's see here. Guys, when you get a question like this, first of all, read what type of business are they? Okay, are they newly commenced one? Are they a goods business or a service business? Because goods business, you account differently. Service business, sometimes you account differently. Okay. So you have to check, guys, first of all, whether it's a goods business or a service. Now, they are a typesetting and a printing shop. Okay, so they are actually providing services, right? So it's a service business. So now, guys, they have given the opening balances of asset, liabilities, and equity. So, guys, record it in the first line. All the opening balances, you can record it in the first line. Have they given you opening capital? Yes, that's also given. So you don't have to find. You don't have to find, they have given. Guys, when you write the accounting equation, don't waste your time. You can write in thousands. Only when you write the transaction, when you describe, you can't describe in thousands. Description should be in rupees. Okay, but guys, when you write the transaction in the equation, you can write in thousands. So don't waste your time. So that's done. Now go to the next part. The following transactions and events took place in this service business. Okay, I'll go a little bit fast if it is easier. Cash paid to buy stationery stock 830. Guys, you have paid cash to buy stationery. Shall I ask you all one by one? Can you all tell the answer? Raise your hand if you know the answer. First one. Who can unmute? Raise your hand. First one. Cash paid to buy stationery 830. You all have to tell me where to record. That's it. Okay. Come in proper names. If not, I won't tell you all to unmute. Huh? Some of you all are okay. Fine. Akshika, can you tell me, dear, how to record? Where did you record?
Should increase in stationery and should decrease in cash column.
Very good. Guys, you have bought stationery. If you have bought stationery, your cash reduces. So, guys, reduce your cash by 830 and you buy stationery. When you buy stationery, your stationery is an asset. It increase by 830. If there is a problem in a question, ask me to explain again. If not, I'll just keep on discussing. Huh? Cash received from trade receivable. You have received money from trade receivable. Amina Nizlan, where did you record? Amina?
Cash increases by 230 and trade receivable decreases by 230.
Oh, okay. So now, guys, good job. That's correct. You're receiving money, guys. When you receive money, your cash increases. Cash is an asset. So because of that, increase your cash by what? By 230. And who gave the money? Trade receivable. So if trade receivable gives the money, your trade receivable is an asset. Your trade receivable reduces by 230. Since he gave cash, cash increases by 230. If you can't understand, ask me to explain again until you tell me I want to. Next one, Anuruddha, the owner, guys, he introduced further 480 cash. Okay, further 480. Now let's ask Hannah. Hannah, can you tell me what's the answer?
Capital increases by 480,000 and cash increases by 480,000.
Very good. Guys, honor brings money. When honor brings money, your cash increases. You're getting money, right? Your cash increases. Guys, remember, equity, when you do accounting equation, you need to know, guys, equity increases by what and what. So without that, you can't do accounting equation. Equity increases when there is an additional capital, when there is an income, okay, when there is a net profit. Next one. Equity decreases by what? Drawings, expense, and net loss. So now because it's an additional capital, owner is bringing more capital. So equity will increase by 480. Please mark your answers, if it's correct. 480. So guys, equity increases while cash increases. If you know the answer, raise your hand so I can ask you all, okay? If you all have answered once, lower your hand so I can give everyone a chance. Huh? Next one, purchase stationery stock on credit. Okay, Zahra, purchase stationery stock on credit. When you purchase on credit, whom do you create?
Trade payables.
Trade payable. Okay, tell me how to record.
Trade payables increases by 670 and stationery increases by 670.
Very good, guys. When you purchase on credit, you create trade payable. Trade payable is a liability, so your trade payable increases by 670. You buy stationery, guys. Stationery also increases by 670. When you buy stationery, your stationery increases by 670. Okay, others, y'all can raise your hand, please. Next one. Cash receivable. They told you receive cash? No, not yet. Cash receivable for service rendered, service provided. You have to receive how much? 1,400,000. You have to receive. You haven't received it yet, guys. You have to receive. Mushtaq, can you tell me how to record?
Debtors increased by 1,400.
Okay.
Capital increased by 1,400.
Very good, guys. It's a service business. Providing service is an income. So because of that, income increases your equity. You provide service, guys. It's an income. So equity increases by 1,400. And then, guys, see here, when you provide service on credit, you create trade receivable. Okay, so trade receivable is an asset. Asset increases by 1,400. If there are any students who went and record under cash, you did a mistake. Why? Because they didn't say cash received. They said cash receivable. That means they still haven't received the money. They have provided the service, but not yet received the money. So I hope you all are clear. Next one. Anyone who can answer, raise your hand. Electricity and building rent paid in cash for the month of Jan, 20,000. And the next one is 30,000 respectively. Who can answer? Please raise your hand. Ashfa, can you answer sixth one?
Minus 50 cash, minus 50 capital.
So guys, these are expenses, right? So expenses shall decrease your equity. Okay. So guys, these are expenses. So because of that, your equity decreases. When you pay for expense, your equity decreases. So reduce your equity. Don't show it together. Guys, you have to write it separately, 20 and 30. Why? Because these are different types of expenses. So write it separately. But you're paying money, right? So cash reduces by 50. You can write the cash together. But when you're showing the expense, make sure you show it. Okay. You show it separately. You show it separately. Okay, when you're showing the expense, make sure you show it separately. But cash you can write together because you're paying the total 50,000. You're paying the total 50. What are the two types of expenses? To show that there are two types of expenses, show it separately under equity. Next one. The owner withdrew 70,000 for his personal use. Kanza?
Cash decreases by 70,000 and equity decreases by 70,000.
Yes, guys, it's a cash drawing. Since it's a cash drawing, cash reduces by 70,000. Guys, and when the owner takes money, what happens? Equity also decreases. When the owner pays money, what happens to equity, guys? Equity also reduces by 70. Okay, equity also reduces by 70,000 as well as cash reduces by 70. See whether y'all are okay. Next one. So cash received for service provided. Now it's like cash sales, guys. Cash received for service provided is like cash sales. Okay, Shahani, how did you record?
Cash increases by 620,000 and
Okay.
equity increases by 620,000.
Very good. As your cash increases when you when you give a service, your cash increases, as well as what happens to equity. Your equity also will increase. Equity also will increase because it's an income. Because it's an income. Guys, please understand, you can provide service on cash or on credit. When you provide service on cash, you get cash. It's an income. Equity increase. When you provide service on credit, you create trade receivable increases, and service is an income. So equity increase. So this one, so the fifth one is like credit sales in a goods business. And eighth one is like a cash sales in a goods business, because it's a service only. The way they are telling is different. Okay. Now go to the ninth one. Cash received from debtor, trade receivable 980 and 20 was discount allowed in settlement of 1 million. Okay, Shamil.
Capital minus 20, trade receivable minus 1000, cash plus 980.
Very good. Guys, you're receiving cash. When you receive cash, your cash increases. How much are you receiving? 980. 980 cash increases. You receive money, guys. So when you give discount to trade receivable, it's an expense. We call it discount allowed. So discount allowed is an expense. So expense reduces equity. Go and reduce your equity by 20. Okay, expense will reduce your equity by 20,000 and you receive cash 980. How much did the trade receivable settle? 1,000. So because of that, equity reduces, sorry, your trade receivable reduces by the settled amount. Okay, trade receivable reduces by what? The settled amount, because the trade receivable has settled 1 million. This fifth one, we didn't receive cash, right? How did the capital increase? Because you can provide services either on cash or on credit. We have studied, no matter you provide on cash or on credit, it's still an income for the business because it's relevant for the year. It's relevant for the year. So it's an income for the business. No matter you provide service on cash or on credit, still it's an income. So that's why we record it under equity. Okay, just like you record when you find total sales income, you take cash sales plus credit sales, right? Because both are sales. So even though you provide service on credit, still it's relevant for the year, right? It's an income relevant for the year. So you should increase your equity based on accrual concept. Next one. Cash paid to creditor. Anyone who can answer, raise your hand. Cash paid to creditor 770. Okay, receiving a discount of 30 in settlement of 800. Okay, Asia Maryam, please. You paid cash 770, Asia.
Cash reduces by 770.
Okay, guys, you're paying cash, so cash reduces by 770. Is it discount allowed or received? Yes, Asia, discount allowed or received if the trade payable gives a discount. Asia, we can't hear you if you're speaking. Still, we can't hear you.
Discount received.
Discount received. So what will increase?
Equity increases by plus 30.
Yeah, because guys, it's an income. Discount received is an income. So equity increases by plus 30. How much totally you settled your trade payable?
800.
800. When you settle, trade payable increases or decreases?
Decreases by 800.
By 800. Remember, trade payable and trade receivable reduces always by the settled amount. Settled amount. Okay. So that's the one answer for the next one. Now go to the next one. Cash paid for salaries and wages. 30,000. Who can answer? Who didn't answer yet? Raise your hand. Okay, Amina, Hamid.
Cash reduced by 30. Expense reduces equity capital by 30.
Very good. Guys, salary is an expense. So expense increases, equity decreases. So equity reduces by 30. When paying cash, cash reduces by 30. Cash reduces by 30 as well as equity shall decrease by 30,000. Equity shall decrease by 30. Next one. Depreciation of computer and equipment for the month is 20. Who can answer? Raise your hand. Anyone who didn't answer it, please, quickly.
Miss,
Yes, Farha.
equity decreases by 20,000. Computer and equipment account decreases by 20,000.
Okay, guys, you're depreciating your asset. When you depreciate your asset, it's an expense to the business because asset value reduces, expense increases, equity decreases. What happened to your asset? Asset value reduces, so you have to deduct it. Computer equipment is a non-current asset. When you depreciate, your non-current asset value reduces, so you have to deduct. Since it's an expense, you have to deduct equity as well. Last one. Stationery stock as at 31st Jan is 810. Guys, this is the closing stock of stationery. The closing balance of stationery is 810,000. Can you add this 3 and tell me how much is it? Can you add this 3 and tell me how much is it? How much?
1,770.
1,770, but the closing balance shows as 810. What is the reason behind the difference? Guys, your closing. So, yeah, what is the reason? See here, at the starting date, you had 270. You purchased 830. Again, you purchased 670. At the closing date, 810 is only remaining. What happened to the stationery? Think you're doing an institute. You're a lecturer. Think as a lecturer. When they have bought stationery, let's say A4 papers. Why does the A4 papers reduce? Used, guys. Used. You have
Used.
Yes, you have used the stationery. Just because you used, it's an expense. How much worth of stationery have you used? You had
960.
960. Guys, you had 1,770, but at the end of the day, only 810 is remaining. That means you have used this month, you have used 960,000 worth of stationery. That's why your stationery reduces. Your stationery reduces by 960 because you have used it. Guys, when you use your stationery, it's an expense. Because of that, equity also decreases. Once you use the stationery, it's an expense to the business. So equity reduces by 960. And when you use the stationery, guys, stationery also reduces by 960. Can we take it as a stock loss? Yes, you can. But the most accurate answer is stationery used. Because when you do income statement, there can be a mistake there. That's why I'm telling you. Because, guys, imagine you can't have a very big loss unless it's a big thing. But the most accurate answer is you have used it, guys. You have used the inventory. There is no depreciation for current asset. Stationery is a current asset. There is no depreciation. Now get the closing balances. See whether you all are clear. I'll give you 2 minutes. Go through it. So then we can find this is the stationery used. Please check whether you all are clear up to here so we can go to the next requirement. Okay, the last one I'll explain one more time. Guys, they say at the end of the year, at the end of the month, closing stock is 810,000. 810,000 worth of stock is remaining. But if you total this up, you're getting 1,770. But only 810 is remaining. What happened to the difference? Because guys, you have used it. You have used the stationery. That's why it's not there. Because if you total 270 plus 830 plus 670, you get 1,770. But only 810 is remaining. That means you have used 960 worth of inventory. So when you use the stationery reduces, right? When you use stationery, your stationery reduces, guys. Stationery used is an expense. So expense also reduces. It's okay, Anika. Okay, so now guys, go to the next one. You prepare income statement. Next requirement is to prepare income statement. Guys, when you prepare income statement, now what is their main cost for this service business? What is their main cost? What do you think? What is their main cost for this service business? What do you think? They are providing this service, right? For this service to provide, what is the main cost? Printing service. What do you think?
Electricity.
No. Think, man. If it's a printing business, what's their
Papers.
salary?
Stationery.
Stationery. Guys, think, will you? If you are a printing business, you need stationery, man. If you are doing a printing business, the main cost will be your stationery. Okay, unless I understand to buy the machine and all, but I'm asking day-to-day expense. I'm not asking buying the machine and all. Okay, ink, if you buy ink, it's a stationery, right? So if you are a printing shop, your main cost will be, your main expense is what? Your main expense is stationery used. Stationery used. So guys, that is, we can take it as the cost of sales for this service business, because that's their main expense to provide this service. So we can take that as the cost of sales for this service business. So guys, when you do the income statement, what is their main income? Service income. You will take the service income. What is their main cost? Stationery used. You will deduct their main cost to get the gross profit. And then you will add other income. If there are any other expenses, you have to deduct to get the net profit. Guys, what is the total service income? How many times did they give service? Check here. What are the times? Now, fifth one. They gave a service in fifth one. Service rendered. What else? They gave another service on 8. What is the total service income for the current month?
2020.
2020, 1,400,000 plus 620. Guys, their total service income is 2020. How do I know? One service they provided on credit, while one service they provided on cash. So their total service income is 2,020,000. What is their cost of sales? That's the stationery use. How much is that? So whatever I have recorded, I will highlight it so that we don't record it again. Guys, what is their stationery used value? 960. Then what's their gross profit? So 960 also done. What is their gross profit then?
1060.
1060. Their gross profit 1060. I'll give you 2 minutes. Can you find it? All you have to do is go through equity column. Go through equity column and find your income and expenses. Finish it off. Get me the net profit and send me the net profit value. Yes, Umaira. Yes, most of you all have got the correct answer. So far, let's see the ones who have sent, if there is anyone who sent the wrong one. So far, the ones who have sent all of your answers are correct. The profit is correct. Now, guys, what are the other incomes you got other than your service income? Is there anything which increases equity and it's an income? Go and check, is there anything plus here? This plus 480 is what? Plus 480 is additional capital. So that's not an income. What else is there? Plus 30. What was this plus 30?
Discount received.
Discount received is other income. Record discount received, guys. It's another income. Another income. So you can record it as other income. Only consider equity column to find the to calculate income statement. Only consider equity column. Now, guys, all what is decreasing is expense. If there is drawings, it's not an expense. Is there any drawings here?
Yes, miss. The
Which one?
70,000.
70,000. So it's a drawing. Without the drawings, you have to record all the others as expenses. Guys, start recording one by one, except for 70,000, because 70,000 is drawings, guys. Other than that, remember drawings, guys. Remember, drawings is not an expense. Additional capital is not an income. Not an income. So other than that, record the others. So guys, all the expenses one by one recorded. So guys, what's the total of expenses?
120.
120,000. So what's the net profit? 970,000 is your net profit. They are asking you to find the net profit using net asset equation. Guys, net asset equation is this equation you study in chapter 2. Asset, this closing capital equals opening capital plus net profit minus drawings plus additional capital. We call it the net asset equation. What you have to do, guys, yeah, so stationery used is here. This one. Okay, so guys, that is like the cost of sales for a service business. Okay, so now what you have to do is you have to subject your net profit. You know the equation, net asset equation is closing capital equals opening capital plus net profit minus drawings plus additional capital. Now subject your net profit. If you subject your net profit, keep the net profit in the same side. Keep the net profit in the same side and take all the others to the other side. So when you take opening capital to the other side, it becomes minus. Drawings, when you take it to the other side, it becomes plus. Additional capital, when you take it to the other side, it becomes minus. So you know, guys, how much is the closing capital? We already found out in the equity column. Equity column closing capital 5,610. Opening capital was given 4,230. We know additional capital is how much? 480,000. And we know drawings is 70,000. So put every information, whatever I'm marking in green color, you can put all the information and get your net profit. You should get the same answer. If not, your answer is wrong. You should get 970. So closing capital minus opening capital plus what? Drawings minus additional capital. So let's see whether we are getting the same answer. So guys, you have to put everything. Are you getting 970? 970,000. Yeah, 970. I'll give you 2 minutes before I go to SOF. Yeah, if you want to copy something down. Okay, actually, in accounting equation, SOFP is the easiest one. How did you get 5,610? By just totaling the equity column. If I total the equity column, I get 5610. That's all I did. Okay, guys, accounting equation question, SOFP is the easiest one. You know why? Just the whatever you wrote in horizontally, write it in vertical format. Whatever you wrote horizontally, all you have to do is write in vertical format. Guys, non-current asset, there was only one non-current asset, compute and equipment. What is the closing balance? Go to compute and equipment column. Closing balance is 2,810. You write here 2,810. Okay, then guys, what are the current assets available? If compute and equipment is the non-current asset, these three are the current assets: stationery, trade receivable, cash. Write the names and write the values. Stationery, trade receivable, cash. Then guys, write the final answer: 810, 850, 1,680. You understand why am I saying it's easy? All you have to do is copy paste it. Then guys, what's the total you get here? What's the total of current asset? Yes, please. 3340.
3,340.
Okay. Then what's the total asset?
6150.
6150. So now we have to get 6150. Total is 6150. Okay. So guys, we have to get how much? We have to get 6150. Miss, don't we have any closing stock? That's what stationery. This is a business whose main stock is stationery. So that's the closing stock here. That's the closing stock here. Okay. So now guys, but one thing you need to know, when you're doing equity, you can't just write the total. You can't say 5610. They won't give marks. When you do SOFP, for equity, you have to write the equation. Opening equity, that's what here, plus net profit minus drawings plus additional capital. You have to show separately. Opening equity 4230. We found out net profit 970. We know drawings is 70,000. Drawings reduces equity, so put minus. We know the additional capital is 480. Whatever we wrote here, we will write it like this equation. Opening capital plus net profit minus drawings plus additional capital. Guys, what's the closing equity value? If you add all this, same answer. You will get this answer.
5,610.
5,610. Guys, is there any bank loan? No, right? No, any non-current liability. Only one liability is there, trade payable, which is current liability. So write the closing balance of trade payable, take it to the second column, get the total answer. So you should get the same thing, 6,150. We are done. We should get the same thing, 6,150. Okay, so we are done. So that's it, guys. We are done with day one of the revision class. See whether you all have understood so far up to whatever I have taught. Okay, so this is how we will be doing our revision class. You will be getting every week one paper. You all have to do that paper before the class. Okay, you all have to do that paper, and then guys, in the class I will be discussing the paper, trying to cover along the theory part as well. Okay, so I will tell you, this class will only be effective if you do the paper. Without doing the paper, if you are not going to do the paper, please don't join the class. No use, guys. It's your waste of money and time. You have to do the paper before you come to the class. Then only you will find the betterment of yourself. You understood? So please make sure you all really study well. If there are any external students, I hope you all study well and get good results, guys. Take care, guys. Study well. The revision class, okay, the same time, it's 7 o'clock to 9 o'clock. Monday, 7 to 9 o'clock. If you are a theory student, for you guys, revision, you will get a 500 discount, and revision will be only 1,500 per month. But if you are an external student, revision will be 2,000 per month. By the way, the theory class, now we are in chapter 8, not-for-profit organization. We are going to start past papers. Okay. So guys, let's stop it here. I hope you all are clear. I hope you got some use today. Yeah, the next class is Monday. Okay, so guys, take care, study well. Good night.